My young apprentice, who seeks the hidden levers behind the wealth of financial celebrities, you ask whether passive income, this phrase whispered like a spell in modern financial circles, is the true secret behind their towering fortunes. And to answer you with the clarity of a seasoned elder, I must reveal that the truth is both simpler and far more profound than what the masses believe. Passive income, as preached across social platforms, is often reduced to visions of effortless earnings. Royalties flowing while one sleeps, dividends quietly accumulating, rental checks arriving without strain. But in the world of financial titans, Buffett, Dalio, Soros, Munger, Musk, Thiel, and the great empires of private equity and hedge funds, passive income is not a trick, not a shortcut, not a loophole. It is the result of deep, disciplined, often brutal work performed long before the income becomes passive. The masses chase passive income as an escape from effort. The wealthy create passive income as a reward for mastery. Let us begin with Warren Buffett, the high priest of compounding. His wealth today appears passive. Billions in dividends from Coca-Cola, American Express, Apple, and countless other holdings. Yet these streams did not emerge from idle wishing. They emerged from decades of studying balance sheets, reading annual reports, analyzing competitive moats, and making decisions with the patience of a monk. Buffett does not earn passive income because he sought it. He earns it because he built a fortress of businesses so resilient that their profits flow upward to him like tributaries feeding a great river. Passive income is the flower of a tree watered for decades. Turn now to Ray Dalio, whose wealth is not derived from passive streams but from the active construction of a system Bridgewater that now generates residual power. His returns, though not passive in the traditional sense, come from principles, algorithms, diversified strategies, and institutional machinery that compound even when he is not present. Dalio reveals a deeper truth. Passive income is not always about money working for you. Sometimes it is systems, people, rules, and intellectual property working on your behalf. Passive income, at its highest level, is institutional leverage. Now let us reflect on George Soros, whose wealth did not stem from passive income at all, but from strategic, high-risk, highly active positions. And yet, once his fortune was built, the capital itself began to generate passive streams of influence, interest, and power. Soros teaches that passive income is often the final stage of wealth, not the starting point. First comes skill, then comes capital, and only then do the wheels begin to turn with less friction. Consider real estate moguls and private equity giants, whose passive income seems to flow like water. Rental income, profit distributions, equity appreciation. The untrained mind sees only the effortless cash flow, but behind each passive stream lies negotiations, financing battles, deal structures, legal frameworks, risk assessments, and operational mastery. Passive income in real estate is simply the reward for owning assets that others need, but you no longer have to manage directly. The key lies not in the passivity, but in the ownership. Now, my young student, let us dismantle a dangerous myth. Financial celebrities do not become wealthy by chasing passive income. They create passive income by acquiring or building assets that generate it. This is the great inversion that separates them from ordinary investors. The masses ask, how can I earn without working? The titans ask, what can I build that will continue producing value long after my direct involvement ends? The difference between these two questions is the difference between scarcity and abundance. Look to Elon Musk, a man with no traditional passive income streams early in his career. He burned cash, borrowed, reinvested again. His wealth today comes from equity ownership that compounds as his companies scale. The income becomes passive only once the company becomes a self-sustaining ecosystem. His example teaches that passive income is rarely passive at the beginning. It becomes passive only when the engine of value creation becomes independent. Let us examine Peter Thiel, whose PayPal investment and early stake in Facebook created passive returns of unimaginable scale. But again, the principle holds. The passivity came after the creation. After vision, after risk, after sweat, after sleeplessness. Passive income is the final movement in a symphony whose opening notes are discord, effort, and risk. And what of hedge fund managers, private equity titans, venture capitalists? Their wealth may later generate passive income through interest, dividends, and equity distributions. But their ascent was powered by actively finding inefficiencies, negotiating deals, convincing investors, and constructing strategies. Passive income is not their foundation, it is their consequence. Now, apprentice, we must turn to a deeper truth. There are two types of passive income: false passive income and true passive income. False passive income is what the masses pursue: dropshipping, affiliate links, gimmick businesses, superficial digital ventures promising hands-off wealth. These collapse because they lack the core ingredients that define real passive income: durability, ownership, and value creation. True passive income is what the wealthy pursue: dividends from companies with long-term pricing power, royalties from intellectual property that retains demand, rents from properties in irreplaceable locations, interest from lending activities backed by collateral, equity appreciation from businesses with compounding engines, systems, teams, and frameworks that operate without the owner's daily oversight. True passive income comes from building or acquiring assets that compound without constant intervention. But the greatest misunderstanding in the world of finance is this: passive income is not the secret to becoming wealthy. Active excellence is. Passive income only becomes powerful once you already possess capital, discipline, and insight. To chase passive income without the skills that create wealth is like planting seeds in infertile soil. Let us look now at the psychological difference between the wealthy and the masses. The masses chase comfort. The wealthy chase control. Passive income to the wealthy is not about laziness, it is about owning time. It is about removing themselves from the slavery of daily labor so they can think, create, build, and govern from higher levels. Passive income is the liberation of their calendar, allowing them to focus on empire building. And as we approach the threshold of the next scroll, understand this final truth. Passive income is not the secret to financial celebrity wealth. The ability to create assets that generate passive income is. And in the next part of our journey, we shall explore the kinds of assets these titans build, how they evaluate passive income streams, how they mitigate risk, and how their philosophies transform passive income from mere financial trickle into a self-sustaining engine that multiplies wealth far beyond the reach of ordinary effort, transforming not just income but identity, not just comfort but capability. And now, my young apprentice, let us continue deeper into the architecture of passive income, as understood by financial celebrities, the way they build it, scale it, protect it, and turn it into the quiet, unstoppable force behind their empires. For you see, while the masses imagine passive income as streams trickling gently into their accounts, the elites design their passive income as rivers, fed by tributaries of businesses, assets, intellectual property, and systems that work tirelessly in the background. Their goal is not comfort, it is sovereignty, the ability to shape their destiny without being bound to a clock, a boss, or a market cycle. And so, we begin with the first foundational truth. Passive income is not chosen for ease, but for endurance. Consider how Warren Buffett evaluates a passive income engine. He seeks businesses with moats so wide that competitors cannot breach them for decades. He demands consistent cash flows, pricing power, loyal customers, and managers who treat capital as sacred. These businesses are not just profit machines, they are fortresses that produce passive income regardless of market swings. Coca-Cola sells beverages even in recessions. Apple's ecosystem locks in billions of users. American Express thrives on trust. Buffett's passive income strategy is simple yet profound. Own what people will still need in 50 years. This is why his wealth compounds, while others chase trends that collapse. Now, consider Ray Dalio, whose passive income does not come from one business, but from diversification across economic regimes. His all-weather approach creates passive resilience. Bonds for deflation, commodities for inflation, equities for growth, gold for monetary instability. Even when he sleeps, the strategy is alive, adapting to macro tides. Dalio's philosophy teaches that true passive income is not about a single source. It is about a system capable of thriving in any environment. Turn now to private equity giants, who build passive income through ownership of businesses that operate without their daily involvement. They acquire companies, restructure them, optimize operations, then step back as cash flow begins to pour in. Their passive income emerges from control, not from distance. They build the engine, tune it, and then allow it to run. The masses dream of automation. The wealthy create institutions. Consider real estate magnates, whose passive income emerges from assets located in economically irreplaceable zones. Manhattan properties, logistics hubs, data centers, medical facilities. Their income is passive only because the value of the land itself works for them. Real estate teaches a timeless truth. Passive income is strongest when tied to assets that cannot be duplicated. We must now examine intellectual property, the passive income stream of creators, innovators, thinkers, and founders. Elon Musk earns more from equity appreciation built on innovation than most investors earn from dividends in a lifetime. Authors like Robert Kiyosaki, creators like Oprah, and founders like Peter Thiel generate passive income from ideas that scale infinitely without additional effort. This is the purest form of passive leverage. Create something once, earn from it forever. But, my young apprentice, we must go deeper. For the true distinction between the masses and the financial elite lies not in what they invest in, but how they think about passive income itself. The masses pursue passive income to escape work. The elites build passive income to escape limitations. To the elite, passive income is not laziness, it is freedom from being reactive. It allows them to step back, observe from higher vantage points, and make strategic, long-term decisions instead of short-term survival choices. Passive income gives them control of time, and time is the rarest currency of all. And now let us explore the psychological dimension of passive income among financial celebrities. For them, passive income does not create complacency, it creates clarity. With basic needs long secured, they no longer trade decisions for dollars. They choose long-term advantage over immediate comfort. They pursue projects that matter, not projects that pay next week. They invest in vision, not validation. Passive income becomes the oxygen that allows them to stay creative under pressure. But beware, young one. The elites also understand that passive income, once created, must be defended. And so they deploy strategies to protect and expand their streams. First, they reinvest aggressively. The masses spend passive income. The elites compound it. A dollar that returns is not for consumption, but for multiplication. Second, they build redundancy. No titan relies on a single income stream. They build multiple engines, so if one fails, the empire continues. Third, they automate intelligently. Where ordinary people chase shortcuts, the wealthy build teams, systems, and technologies that scale with discipline. Fourth, they hedge risk. Dalio diversifies. Soros exits quickly. Buffett demands a margin of safety. Their passive income streams are protected by intellectual armor. Fifth, they convert income into assets, not liabilities. While the masses upgrade lifestyles, the wealthy upgrade ownership. Now, apprentice, we approach the crown jewel of this entire philosophy. Passive income is not the secret to wealth. Ownership is. Passive income flows from ownership. Ownership flows from courage, clarity, and creation. Thus, the secret behind financial celebrities is not that they earn money passively, but that they own the engines that continue earning. And with this revelation, we may now lift the veil on the final lesson. Passive income is not a destination, it is a stage of evolution. Active struggle leads to asset creation. Asset creation leads to ownership. Ownership leads to passive income. Passive income leads to freedom. Freedom leads to legacy. This is the path the wealthy walk, not the shortcuts sold to dreamers, but the architecture of true abundance. So, My young apprentice, I invite you to reflect and share in the comments. What kind of assets do you feel called to build or own? And if this journey sharpened your understanding of real wealth, subscribe to this channel where every lesson turns knowledge into leverage and leverage into destiny.